Hello and welcome to this lecture brought to you by the Institute of Certified Finance Technicians. The name of this lecture is How to Categorize Source Documents. First, we're going to look at our learning objectives, which we split into an aim and learning outcomes. So let's have a look at that then. The aim of this particular lecture is to enable the learner to identify and categorize source documents. So we've previously looked at source documents, but we're going to look about them in a little bit more detail at this juncture of the course. Our learning outcomes are as follows: to enable the learner to define source documents. You should be able to do that at this stage, but we're going to just revisit that one to make sure you're absolutely clear. And also to enable the learner to identify 6 categories of source documents. And that'd be really important because, as we've said before, that source documents are the beginning point of bookkeeping. And the next one is to enable the learner to identify specific examples of source documents. So you're going to be very clear about what they are and how to categorize them, and therefore you'll have a better understanding of how to process them. The next slide is one you should be very familiar with now because we've used it on a number of preceding lectures. And it's the slide that breaks down bookkeeping into the various stages. So it starts at source documents, it moves on to the books of original entry, it then moves on to the books of double entry, and then finally it ends with a trial balance. So to reiterate the question you've been asked a number of times previously, what are source documents? You should know the definition at this stage, but we'll go through it again. Source documents are documents that detail financial and non-financial transactions relating to such matters as sales and purchase of products and or services, and other types of financial transactions such as loans, taxation, capital. So again, you want to be super familiar with what a source document is. And we're just going to look through a few examples now. Again, these are very basic examples, but you should be able to identify one, a real example from your workplace perhaps. So here's an example of a purchase invoice. And as you can see, the purchase invoice has the name of the company who is the supplier. In this instance, the supplier is Office Supplies Limited. The customer is called Trendy Tables, and we have a date. So this one's just noted the 15th of Jan. Obviously, they normally have the year in, but this is just an example. And the details identifies that one conference table has been purchased for the amount of 1,500, be that dollars, euros, or pounds, or whatever the case may be. So that's what a purchase invoice looks like. The name of the supplier is usually fairly prominent on the document, and then it must have the name of the customer. Other details may be included here, such as order numbers or the sales invoice number as well, or the purchase invoice number I should say in this instance. So just be aware that's what one looks like. So the next one we're going to look at is a sales invoice. And again, very similar to the purchase invoice. This time we have on the sales invoice the name of the customer is here as Joe Blogs, and the name of the supplier is Trendy Tables. So again, it's the sale from Trendy Tables to a customer called Joe Blogs, and the physical amount is for $2,750, pounds or euro, whatever the case may be, and it's for a conference table. So if we look at these two particular source documents side by side, it can help us. So in this instance, Trendy Tables is buying from Office Supplies Limited, and in this instance Trendy Tables is selling to Joe Blogs. And the difference between this price that has been paid and this price that has been charged to Joe Blogs is the profit on this particular transaction. So that's pretty straightforward. And again, depending on the size of the organization you're involved with, it may have dozens of these type of documents in any given month. It could have thousands, it could have hundreds of thousands. It just depends on the organization for which you're working. So just be careful that one organization's purchase invoice can be another person's sales invoice and vice versa. So now we're going to have a little look at a bank statement. So a bank statement is just the details of monies going in and monies going out of a bank account in relation to the business. And this is a pretty basic one. It will have a date, whatever it is just showing transactions for the month of January. In this instance, on the 1st of January, we have an opening balance of nil, so they had no monies available. Then on the 2nd of Jan, they had a lodgement of capital introduced, so that's money coming in of 1,000 dollars or euros or whatever the case may be. And this is capital introduced, so money's introduced by the owner of the business. So now you can see that once the money comes in, it adds on to the balance. So now there's 1,000 available to the business to spend. Then on the 5th of January, we have a receipt of a loan. So money's borrowed from some third party, and that's adding to the amount of funds available. So the 4,000 and 1,000 gives 5,000 over here. Then during the period, there's been monies being spent. So on the 6th of January, EFT stands for Electronic Fund Transfers. You can see noted down here to a company called Tech Limited, 3,600. So this comes off that balance, reducing the balance figure to 1,400. And then on the 31st of January, another electronic fund transfer to Property Services Limited, 450, reducing this figure from 1,400 down to 950. So bank statements, pretty straightforward. It just shows money's going in and money's going out. And part of the bookkeeping process will be to identify what categories these need to be classified into. The next example we're going to look at is in relation to petty cash. And petty cash is pretty straightforward. It's just transactions of a cash nature for relatively small sums of money. The first document over here, as you can see, petty cash slip number 005, identifies that monies was put in perhaps by the owner of the business, because it says lodged personal cash into petty cash on the 15th of January 300. So 300 has been lodged in on the 15th of Jan. So that's just a record of monies going in, because we need to know where the money came from. Then we can have a look at monies being spent. So it looks like some money was paid for ink, perhaps for the printer, on the 22nd of Jan, and they paid $50, euros or pounds in cash. And again, these numbers just help keep a sequence of transactions. So therefore, if we have 15 documents issued in a given month, we should have them in sequence from 0 to number 15. If we don't, then we know we're one missing effectively. So that's an example of source documents, petty cash vouchers. So now we're going to move on to putting the source documents into categories. And there's a number of categories they'll fall into quite neatly. The first category would be source documents relating to customers. And that would be all our sales invoices and the credit notes as well in relation to customers. And then we have suppliers, we'll have banking documents, we'll have petty cash documents, payroll documents, and it's always just handy to have a separate section for other that everything else can fall into. Now within each one of these categories, there's a variety of different documentation that might fall into that particular classification, so we need to have a little look at those as well. So the next one up we're going to look at in more detail is surrounding customers. So what do we need to know about our customers? Well, we can have delivery dockets issued. So if we're in the business of selling a physical product, we need to keep a track of all those physical products that are leaving our warehouse, and we need delivery dockets to enable our customers to sign to validate that they've actually received them. So that'd be hugely important when it comes to getting paid. If there's any dispute whether they actually physically got the actual products itself, we can look up and see who signed for it and trace it back that way. So it's delivery dockets issued. Sales invoices. So every time we sell products or services, all we're going to do is generate a sales invoice to validate what we sold them and the amount of monies they were charged. Credit notes issued. If there was any overcharging or any returns, we're going to have to issue a credit note to the customer. That's pretty straightforward. Debtor statements. So this will be a list of invoices that are outstanding to the customer at a particular point in time. Debtor statements are usually issued at the end of a given month. And it's a really important internal control, which we'll talk about in some detail later on, because in order to ensure that we get paid from our customers, they need to know how much money they are due to pay the organization. So that's customers. So let's have a look then at suppliers. And suppliers generate a certain amount of information as well via source documents. So purchase orders issued. So sometimes it can be the case that you may have to issue a purchase order to your supplier prior to them supplying you with a product or service, and that is just an official order as such, and that might have an order number on it which will enable the supplier to get the order ready for your acquisition as such. Next up will be delivered dockets received. So at this stage, you will get a copy of the delivery docket that you have signed for on receipt of the goods that you receive from a supplier. Purchase invoices, again, will just list down what you've bought at what prices in what quantities, or detail the service you've received with similar details. Credit notes received, so therefore if you have a credit that you're due, you're going to get a credit note that will itemize what that is. And then also very important for your organization is at the end of a given period, you're going to get creditor statements. And creditor statements will facilitate you understanding the debts that's due to third parties. And let's just say on that particular creditor statement, there are 10 invoices listed and you only physically have 8. Then you're going to have to find out where the other 2 have gone and perhaps request copies. That'd be pretty standard internal controls. In relation to banking, you can have a number of documents in relation to that, so we can have a look at that. So we can have bank statements, which you looked at previously, money's coming in, money's going out, and the available balance to spend. Next one up will be lodgement slips. So lodgement slips can identify how much money you've banked. So if you're a cash-based business, maybe you need to do regular lodgements. You need to keep track of the cash going in by having a stamped lodgement slip receipt from the bank issued to you. Cash sheets can be useful if you're running a retail business and you want to keep a track on cash at the end of every given day and reconcile the amount of cash that your till says you should have against what you physically have in the till itself. Check stubs, if you're old school and still writing checks, you may have a whole load of check stubs that would record all the checks that you've issued during a period of time. Remittance and advice slips, you can have them received or issued. So remittance advice slips are details from your customers of how much they've paid you, or remittance advice slips issued are the details of the purchase invoices you are paying towards the debt of a supplier. So that's a lot of information concerned around source documents relating to banking. Okay, credit card statements. If you have credit cards, you will have statements coming in usually on a monthly basis that will identify the amount of monies that have been spent using the credit card. Again, that's very similar to a bank statement. And then you may have credit card receipts. So every time that you purchase something using a credit card for business, you want to make sure that you get a verifiable receipt with that as well. And then finally, and again, this is not an exhaustive list, but it'll give you a good indication, loan agreements. So if you have any borrowings from a bank, you might want to have a copy of the original loan agreement so you can ascertain whether you're within the payment parameters that you set out to being charged in the first instance. And then we're just going to move on to petty cash. Petty cash is an area that if you have a petty cash system, you will have cash expenditure receipts and cash lodgement receipts. Pretty straightforward in that you need to have both of those available to be able to calculate how much money should be left at the end of the period. And then we're just going to look briefly down at payroll, and usually payroll is done on payroll software, and at the press of a button you can get all these reports. You may keep them in hard copy or soft copy, but all the reports surrounding deductions from payroll should be maintained on the payroll software system. Pay slips, sometimes your staff may want copies of pay slips, so if you have these physically, you can give them a copy, or you just print them off or email them, whatever the case may be, straight from the payroll software. And then just the default section, other, can just be any other source document that doesn't fall into those previous categories that we just looked at there. So that would be tax documentation, fixed asset documents. So when you buy, let's say, a motor vehicle or some piece of equipment or machinery for your factory, you might want to have some documents to back that up, especially for things like guarantees and what have you. Licenses, if they're required, and rental agreements perhaps. So there can be other items of source documents that might be relevant to your organization, and you can open up a separate category for them or just dump them all in this other category. It's clearly up to you. Now, if you want to file these, you just need to consider having some kind of filing system. A most basic one would be, if you're going to be paper based, is to just put them into lever arch folders and have a separate folder for each one of these. So for your customers, for your suppliers, for your banking, for your petty cash, and for your payroll, and for other. So just set up a separate lever arch folder for each one of those. Alternatively, you might want to keep all these on soft copy on your computer. It's entirely up to you. So just to summarize, before we come to the end of this particular lecture, is to consider the following. We looked at source documents, and these are these type of documents up here. There's an example of the purchase invoice and the sales invoice we looked at earlier on. And our aim was to enable the learner to identify and categorize each source documents. So we talked about the categories of source documents, and you should be able to clearly identify what they are. So hopefully you'll have a better understanding of source documents, how to categorize them, and how to file them. And then finally, we're just going to say to you that the categories are listed there: customers, suppliers, banking, petty cash, payroll, and other. Set up your filing system, and it'll make it a lot easier to process your bookkeeping. So just to finalize this particular lecture, it's recommended that you have a look at the microtask 03BKL1 source documents microtask. Answer those questions. Hopefully you get them all right. If you don't, it would be important for you to identify where you went wrong. That concludes this lecture. Thank you for viewing.